It's time now for Futures in Focus. Some cities, including right here in New York, are definitely looking forward to spring-like weather next week after that Arctic blast. For more on the impact on energy prices, we're joined now by Phil Streible of RJO Futures, who comes to us from the CME. Phil, thanks for joining. And of course, we recognise that there were fatalities during this polar vortex. It was a very serious affair. In terms of demand, though, for things like natural gas, crude oil products, hydrocarbons in general, what did you see at the CME in terms of pricing?
Well, I mean, with the two-day polar vortex behind us, we never saw that spike up in natural gas or heating oil that one would expect, showing us that supplies are quite ample right now and demand is going to go back to more normalized levels. So we don't have very much of an optimistic output for the bull side for natural gas or heating oil. But if you look to other commodities like the crude oil market, we really expect crude oil prices to start to move higher as we get into this unseasonably now warm temperatures as driving picks up, and also with the Federal Reserve starting to pause on rates, we should start to see business expansion continue. Oil prices, remember, we are seeing a supply issue coming from Venezuela. We've got the U.S. is basically cut off from all imports from Venezuelan oil. The U.S. consumes about 20 million barrels per day. We're only producing about 11 million barrels per day. So there is that shortfall there. We would expect oil price to break through $55 and push up to the 200-day moving average at 62.
And then, Phil, what was the reaction to the jobs report this morning? It was obviously a blow-away report in many respects, perhaps not so much the average hourly earnings increase month over month, but in most other respects. Did people discount it because the amount of replies was fewer than typical?
Yeah, usually, I mean, when we see these blow-away numbers like this, it seemed like it was already built in once we had the blow-away API number that came out. You know, we did see a little bit of movement here in the bond market. The dollar index was slightly lower. There is a bit of optimism that the Fed will continue to raise rates. Now, we did see them backpedal on that at the latest FOMC statement. So it's tough going ahead when you look at, you know, how the jobs report is going to react. We would expect to see, though, some of those numbers revised lower into the next meeting.